following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. Looking good, Billy Ray. Feeling good, Lewis. Okay, we're going to take a look here at what happened on Friday. I probably got more emails about that than I have in a long time, asking me how can the market possibly go up with all the bearish news that we had with the jobs report. And boys and girls, it does it all the time. If you'll stop and think, during 2011 through 2015, the market went straight up with virtually no correction. We had lots of bearish reports during that time. Some of them would stop the market for 3 or 4 days, but then they just kept going and going. This one was more interesting because it stopped at nearly every single index right after the open, exactly at a Fibonacci number. The first one that I put in there is the ABCD on the E-mini S&P. We did the same thing in the NASDAQ. It was spot on, and you can see that we're almost, we got up to right near that level where it should have extended to another ABCD, but that's got a range that can go another 40 or 50 points higher. Just because we're hitting these doesn't mean that we're going to stop exactly at those numbers. It's just not the way the cookie crumbles. And, you know, these markets, they get down there, and once they start, it becomes a self-fulfilling prophecy, because remember, when these markets open higher, you know, sharply higher, almost every time they sell off a lot, and the reverse holds true when they break a lot. And that's you know, because people are searching for buys, you know, and when they open higher, people are searching for sells, and that's why it, you know, usually happens the way that it does. We've got some, you know, ABCD patterns forming here today. And this is a real key day. We've identified this October 5th as a key Bradley date. Norm Winsky also has it on his calendar as a key date, and he's looking at things not only in Bradley, but he uses a heliocentric way of looking at cycles too, which is a way you look at the cycles from the sun's point of view as opposed to the Earth's point of view. It's like going to a baseball game. You see the same game whether you're looking at it from the third base side or the first base side. It's a question of the perspective of, you know, where you're looking, but the cycles will fall into line either way that you're looking at these. They become very, very positive, but when they line up together, that even gives a much greater indication of what we're possibly looking at. Now, I wanted to take a quick look here at the Dow Jones here, because I wanted to talk a little bit about the Bradley model. In fact, more than a little bit, because I wanted to explain this is how I got into this whole business of astrology real heavily after my bout with, or my good experience with Mary Rivers when I was at Drexel in trading silver. I had an interest in it, but I'd never really found anything. But after I had left Commodity Corporation in '86, in July of '86, in August of '86, Dr. Miller had contacted me through my aunt and told me that she had found some interesting things with Fibonacci's and the astrology stuff. And she gave me a forecast of soybeans. I believe it was for November beans, and no, it was for August beans. And she said August beans would go off the board at, I forget the price. I should have kept the little piece of paper because it would be a very priceless memento for me to have. And it was within a penny, and she had given me this note 6 weeks ahead of time. And so I called her and asked her, you know, what was happening. And she said, well, I had hedged her husband and her son ran the farm there in Farmersburg, Indiana, which is just south of Terre Haute. It's a 1,900-acre soybean and corn operation, and we hedged the crops for them. We also did speculative buying and selling, and we did a good job for them during the times I was at Drexel from '76 through '82, and we remained friends up until the time John passed away relatively early. Terry passed away just a few years ago at the age of 60 of a heart attack, and that was a very sad day for the whole family, including me. And so anyway, what happened was she said, look, I'm going down to Florida, for the holidays because they had a home down there during the winter season, down in Sarasota. And she says, "Why don't you come down for Thanksgiving and we'll work on this?" And I said, "Well, I got time right now. Why don't I come back to Terre Haute and we'll work for a while and then we'll go down to Florida together if I decide that we want to do that." So I did, and I was gone a period of about 6 weeks. And once I got there, she had showed me this little book called Stock Market Prediction by Donald Bradley. It was a $4 book published by a little, what was it, Lambert? No, what was it? Not Lambert. It was some publishing company, very, very small publishing company out of Detroit. And basically what Donald Bradley did was he basically lined up these different planetary cycles, and he rated them 1 through 10. In other words, the Moon and Mercury and, Venus and Mars all had different weights based on the valence of the patterns. And the valence of the patterns, that was determined by Dr. Barr out of Yale University. This is from a study that he had done way back in 1922, I believe, that he discovered that certain planets had a positive valence and other planets had a negative valence. So he used that as his guideline, to try to line these up. So after he weighted all these, he took the year 1946, and then he weighted these, like I mentioned, and then he put them in a siderograph, which was able to graph what the prices were going to do. And then he followed it for 1947, and it was a very, 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 very neat fit. The correlation was well over 80%, and it looked, really great. I had never seen this book before, and not many people bought the book. It was only $4. I think people sell it on the internet now for $50, but it's only 45 pages, I believe. And it's quite simple what he decided to do. And so what we decided was that we needed to test if this was going to stand the test of time over a long period of time. So the way to do this was to take the dates of the stock market from 1885, when we had really good data. This was 20 years after the Civil War. We were having good data come in on the stock market. And of course, the Dow came in at 1895, I believe. So we had pretty good data at 1885 through 1986, which was when you're looking at 16 samples per year. And usually that's how many hits you'll get over a period of 80 years. You're going to get 100. Yeah, been 100 years. Yeah, been 100 years. You're going to get a lot of samples, so it's statistically going to be accurate. So we had the dates. The next thing we had to do was find the exact astrological date of the Bradley model hit. And so what we did was we went down to see Neil Michelson down at Astro Computing in San Diego. He passed away in 1994 of prostate cancer. Really wonderful man. I had known him for quite a while. And he said that, whatever we needed, he would get it to us. And so, okay, these are the dates we want to match up. So give us all these Bradley dates on the computer run. And remember, the computers were not that hot in 1986. We had some laptops no laptops. We had desktops, but there was no superpower stuff. So we were able to match the dates from 1885 through 1986 with all the highs and lows of the stock market. And boy, we found out that this thing really had some terrific hits, far beyond being random. And so then what we started to do was to plot the Bradley model, which was the job of Jim Twentyman. And so we did every year during those years, and it really had some tremendous hits on some of these. But there would be times where the market, inverts, where, in other words, there's a big Bradley date happening and the market just keeps going on. And that happens. I mean, there's nothing we could do about it. It just is a matter of fact. But if you go back and look at the dates, they can sometimes be, very, very deceptive. For example, if you looked at the date on this chart that we put up here, if you just looked at the July, when we were making a 786 retracement after an 8-day rally, you'll see there was supposed to be a Bradley low come in at that high, when in fact it was a Bradley high date. And this is what we have going on right now into October 5th. It should be a low, but in fact, there's no question it's going to be a high because we're sharply higher than we were on Friday. So that's telling us that we're going to go higher. We could go higher into the 6th, the 7th. We could go higher the whole week, and this thing could be wrong. But, if it's still up on Wednesday and you're above 1980 in the S&P futures, this is certainly wrong, and we're going to go probably, to 2040. in the thing. So you could certainly do that without any trouble at all. So this is the cycle work that we did to, to understand, to try to how to use the Bradley model. You just cannot use it by itself because of the fact that it does invert. If it didn't invert, you'd have something that would just be unbeatable, because it really hits some terrific. If you just look at these highs and lows of when the market turns, they're very, very close to these Bradley dates, and so they do mean something. The question is, you have to look at those in contact with pattern recognition, or using some other indicator to try to get you into the market. But you want to be watching for the market to reverse during your time that you're coming in to a key Bradley date, like we have this week. We have the 5th and 6th. And then the other thing is, we have on the 9th, we have Mercury is going to grow going back from retrograde to direct motion. If you remember, back on the 17th of February, we switched. Let's try that again, Larry. 17th of September. Was it February? Oh, gee whiz, I'm losing it. No, it could have been 17th of February, I believe. This is what? Oh, boy, October. I'm losing it. This is September. It must have been 17th of September. Yeah, it was the 17th of September when Mercury went to retrograde motion. And that was the day the Fed did their first deal with the not doing anything with the interest rates, and now they're getting ready to probably do the other thing to see what they're going to do. The rates are going higher, folks. There's no question about that in my mind. It's just a question of when. Okay, I finished what I wanted to talk about the Bradley model. It's just a very good tool for picking out dates. It's far from perfect, very, very far from perfect, but it is extremely useful, especially when you put it into conjunction with pattern recognition, and also with some common sense, which is always good when you're trading, and to always be responsible for your own trades too. That's another thing that is very responsible. But this rally that we had on Friday was certainly not unexpected, and how high it's going to go remains to be seen. But we were looking somewhere at the levels that we've talked about already here this morning, 1956 through 1980 in the S&P futures, and from 4290 to 4330 in the NASDAQ, and the Dow somewhere around the high end of that is around 165.50, I believe, would be the high end of that rally if we get it all the way through today and tomorrow. But we are going to start relatively strong this morning, and we'll see how much higher we're going to go. Okay, this is Larry Pesavento, and we'll be right back with some more thoughts on the market, and also cover gold and silver.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened, and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos, or both, the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service, Fibonacci 24/7, is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I wanted to talk a little bit about gold and silver because what's going on right now I think is very important. As you can see from that little trend line that I put on the chart here from last week, we did go popping through that. This morning we got up to 1552 in the silver, which took out the high of the last 2 weeks. Now, that did not happen in the gold market, folks, and the gold market is 6 or 7 times bigger than silver easily. And, you know, silver couldn't even take out the highs of Friday, let alone the old highs at 1158. So that's not a very good sign from the bullish camp starting early this morning. That doesn't mean this can't change. It's just the first sign that, you know, maybe there's something not right here because they should have gone together and they didn't. I'm looking at this as a technical breakout type thing, and, you know, if they don't break out together, that's a sign of a little bit of nervousness, whatever you want to call it, but it's the first sign. And if it starts giving it all back, then you're going to be looking at some really interesting things possibly on the downside that would make it look like it's going to be a bearish false breakout type thing, and that's something that we always you know, worry about when we're trading with these things. And believe me, I am the absolute worst person in the world when it comes to picking a buying strength or selling weakness. There is no person any worse than I am. I have every trophy in the world for that. If we take a look at the gold market, you'll see this long-term downtrend line that we've had since January. It's hit 3 times on the way down. Last time was up at that 1158 level, and today's we couldn't even take out the highs. We took out the highs of Friday by just a little bit, but not by much. And now what we're looking at is a potential to, we took it out by just a very little bit so far today, but we haven't even approached, the downtrend line that comes in around 1145. That's why we need a break above 1148 to 1150 in that December silver in order to, December gold in order to get to break out above this trend line. We've broken above it in the silver, and maybe that's going to be enough to pull gold up, but we'll have to wait and see. But gold should be leading the silver. It shouldn't be the other way around. That's the way that it looks like to me. So we'll see what's happening. So anyway, I don't have the last price in silver. Could someone give it to me by any chance? Because I can't have the platform running with the market because it interferes with the thing. Good. So silver's starting to move. There you go. Now we're starting to move a little bit in the silver. That's what we'd like to see. So silver is getting above there. That's a very good sign. Gold should follow along and shouldn't be too far behind it, but we'll follow and see what happens to go from that level. Okay, now the other one that I wanted to mention to you is about the Dow Jones, the target we were looking at in the Dow Jones itself, or the E-mini futures, that comes in around the 165 level that we were looking at. That's a 61% retracement off that intermediate high that we had back on September the 17th when the Fed did their second day of inaction, and whether that's going to be a big event or not, we'll want to be able to see. That's the main thing. But we do have a possibility that some of these commodities, might be getting ready to turn just by looking at what's happened in the Australian dollar and also the New Zealand dollar. New Zealand dollar's had a more than 300 pip move off of the bottom. The Australian dollar about 250 to 300 pips off the bottom. So all this could be meaning that we could be looking at a potential, bottoming in the commodity markets, and this brings up the chart that we talked about last week, and that was from our friend Steve Moore at Moore Research up in Oregon. As you can see here, what he does, he makes a comparison between 1996 of July that year to December 1988 and 1998, and he compares it to what's happening now. And as you can see, this is a very, very high correlation in this chart, and it did bottom, around the time that he was looking at, and almost in a double bottom format, just like this one. So you would think that the market could possibly, be in a very strong move for 30 days. And folks, this is what will happen, because you have a Bradley date today on the 5th or 6th, and the next key date doesn't come in till right after the 1st of November, around the 2nd or 3rd of November. And so you could literally have a straight up move like this without any trouble at all in some of these things. So you've got to be able, to understand that this is, a potential, for doing it. We'll see whether that's going to happen or not. We don't know. But we've got gold has now finally taken out that little high that we had from Friday. No, it hasn't quite done it yet. It's getting close, but not quite. So I'm going to take a little break here and see how the middle-aged crazies are going to buy or sell this morning, and we'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and just wanted to alert you that we made a higher high in gold by 10 cents, and it didn't go any higher than that. And boy, that's a big red flag for me. I would be really, and I know silver went above the number, but silver's a whole lot thinner than the gold. As just, I happen to be long some silver, and so all I do is keep raising the stop on it, and miss the gold move Friday. I really blew that one, but anyway, that's neither here nor there. So what we're going to be watching, though, is to keep an eye on that. I just keep raising my stop by $3 each time it moves up, because it should really have taken off with silver as strong as it is. You know, silver is up over $1,700 value today, whereas gold's up only $300. That in itself is not a good sign from looking at what I'm watching anyway. So we'll see. Now, I've had a question about the thing with Steve Moore's program that he talks about. Basically, that's a comparative study. And that's all it is doing comparative price action. And that's no different than if you were looking at, head and shoulders patterns or things like that. These things have a high degree of reliability, especially when the correlation's as high as they are. So this market would be continued based on Steve's thing that it would continue to go up for at least 30 days. That could be what's happening if we have a really strong day here in the stock market, and also tomorrow and into Wednesday. That would mean that the Bradley model has certainly failed, because if it hasn't turned by Wednesday, it's not going to turn, and you don't want to sit there for 30 days with your, the people in your pocket trying to take the money away from you. So you've got to be, aware that these things can happen. So keep an eye on it, because there's a possibility these things can fail, even though the patterns are right and the timing is right. There's no holy grail here. And believe me, I'm just a technician. I'm the first one to admit here that, we're looking at things that can turn, very, very quickly and, go south in a big way, and you don't want to be standing in front of some of these things. And even with gold here, only backs off a few dollars. It's really not very much. So you have to be patient enough, to get it going, because maybe the buyers are coming in a little bit later here, in the gold market, and then it'll run. So you just got to watch it closely, especially on a key day, because, the Bradley will be affected dates with other things like treasury bonds and some of the other things that we're looking at also. So we're seeing that this is what we're looking at. We have a lot of buying coming into the market right now. S&P up looks like about 20 some points, and the Dow Jones up 100 and some, and the Nasdaq up another 30 or 40. So we're rocking and rolling in buy land today, and we're going to see if this is going to be a key date today, but we'll have to wait and let the trading gods decide that that's what's going to happen. We've got the currencies. The Canadian dollar is still dropping. We're pretty sure that the high that we were looking at in the Canadian dollar is pretty much in place. It did just about everything that you could possibly ask it to do. As soon as I can find it, I'm going to bring it up here. Here we go. And we've had a good break of well over 400 pips in the Canadian. And so we want to be watching, what's going on with that. Now, I do want to move to the euro next, and by the way, I'm going to have one of our favorite people on the air. We're going to have Bill Meridian come on the on Wednesday, and I'm going to have hopefully Norm Winski will be back in the office on Tuesday, and then on Thursday or Friday, I hope to have either Arch Crawford or Rich Anderson, one of the two, as our guest, because of the things that are going on, in the commodity markets. I wanted to cover a little bit more on the currencies, but before I do, I'm afraid I'm not going to miss this, because I do want to talk a little bit about this, because what's going on in the stock market has very little to do what's going on in the world, in my opinion. As you can see here, the debt that's going on in the market is related to everywhere, going back over a global group from 2000 to where we are through 2015. This is really a big thing, folks, and that's where the real problem lies, is in the debt markets. Whether that's going to be a longer-term thing, we'll have to wait and see if this, in fact, is going to be the case. Now, on Friday, with the markets and the treasury bonds and treasury notes both went up and hit perfect numbers. We went up to the 786 again in the notes, and as you can see, they took out the high of August the 17th August 24th. Now the treasury bonds, they were only able to make a 786 retracement of that. And as you can see here on this treasury note chart, this was a shooting star candle, which told us that that's probably some type of a significant top in notes and bonds, at least for the short term. If we take a look at the same thing at what's happening in the treasury bonds, which is the smaller of the two markets, but it's the more actively traded. I mean, there's more people involved in the notes, but because of hedging and things. But for spec business, the treasury bonds is by far the greatest. You can see we had several ABCD patterns here. And if we went back, and I was not able to get the data on this chart to go back far enough, but if we went back to, early August, you would have seen that was that 160.20 level was an exact 786 to the exact tick on Friday when we had it. And now, we've come down well over 2.5 handles already, and it looks like we're getting ready to do even more. So this strength could continue all day long, even into tomorrow. But we'll see if that's going to be a big run here, and we'll see. But the main thing is I think you've got a chance in these to really get a really nice move going in these bonds and notes once they finally do move. I've had a question about the oh my goodness, I wonder if that's is that price line, Charlie, on the line?
Yes, it is.
We have been putting out. We've had the Mexican State Police looking for you, my friend. How are you?
I'm fine. How about yourself?
I'm above ground, staying away from open graves. What can I do for you, my friend?
I tell you something. I haven't called in a while because I actually moved from the U.S. into Mexico.
Oh, well.
The price of houses in Mexico, I bought a house on a hill overlooking the water with a guest house with a price of 70% off what the price was going a couple of years ago.
Wow.
And sold my house in Atlanta in 4 days with 3 people bidding on it.
Well, you got to love that, Charlie. You got to know supply and demand, my friend.
Yeah, so one place doesn't want houses, the other one everybody wants them. So I figured I'll move to the place where nobody wants them.
You got it.
But the reason I called you, I looked at the SPY. Mm-hmm. If you can bring up a monthly.
I can't bring up a monthly, but I can bring up the daily because I do that. The monthly's a little beyond my my pay grade. I could do a long-term chart of anything else because they all look alike. But go ahead and ask the question, and I'll see if I can could help you.
I looked at the SPY, and I always look at the direction when to short is what the SPY is doing. If we look at a monthly, it is heading. The last 3 months is below the 9-day moving average. Mm-hmm. So
yes, it's been in a downtrend. We're having a counter trend rally these last few weeks, but it's certainly been in a downtrend.
I think the SPY looks to me like it wants to bounce up a little bit more, and then maybe, never sure about that, go the other way.
That's certainly a possibility, and we have some key cycles coming this week. Charlie, I have a couple questions for you, my friend. Two is, how did you end up in your price line when you finally finished up, or are you still in it, or what's going on there?
I'm always in it, but I reduced position substantially several months ago. I felt that we had seen the most of the downturn, but now it's back on my radar because I think Priceline, if SPY heads down, then I think Priceline will follow through. And
okay, I have one other question for you, my friend. On your house in Mexico that you bought at 70 cents of the value, what kind of house did you buy? Was it like 1,500 square feet, and what kind of neighborhood? I'd like to make a comparison just for, value purposes. I'm not thinking of moving to Mexico. Are you in La Paz? Is that where you bought it?
I'm in La Paz. I bought it in a professional community, which means the doctors, lawyers, and the retired federal government investigator, one of those policia kind of guys. This is a very good community. And things are done in meters here. I basically purchased a property that is 600 square meters, which is pretty big in this area. And it's and then I got, as a deal, I got the property next to that the owner owned. He was desperate. And I got a 300 square piece of property for like $30,000 that used to go for $155,000. To give you an example, this is a community of business people, well-to-do, gated, and houses used to go $700,000, $600,000 to $700,000. Some of them are still trying to sell it here at that price. I picked it up just so real numbers, $237,000.
Shut the front door and raise the rent. Boy, you can't lose on that deal.
No, and there are people still trying to sell houses here for $600,000. But this guy was so desperate, and there was another one. And they're desperate people who just want to get out. Mm-hmm. And I made 2 offers to 2 people, and I said the first one comes in with the number, gets the deal. And the first one was this individual, and I felt this was the time to buy it. And I'll give you an example. My real estate taxes in the U.S. used to be $6,500. Mm-hmm. Now, granted, I am retired, so I get a senior discount, but now I pay an annual tax of $365.
Wow, that's pretty nice.
Yes. So, and wow. And frankly, the peso.
Well, that's 600 square meters. That's a 6,000 square foot house.
Yeah, that's. About,
what do you got? 5? Is that what? Five or 6 bedrooms?
We actually, that's the property. The house is a 3-story. The house is a 3-story. And I actually forgot what the square meters were in the house, but it's a sizable house with 3 bedrooms, and several bathrooms. Like 3 bathrooms. It's a beautifully well-built house. I mean, this is good. Be sure to give us the address of it so some of our folks can come down and visit you from TFNN for vacation when the weather gets bad in the Upper East. It's not a problem. The place is easy. Club Cortez. And he wants to, Club Cortez. That's where I'm at. And frankly, the way you can tell my house is there right now there are always big trucks parked in front of it.
There you go.
I don't know if I mentioned, I bought a desalination plant from the U.S. government that sold for $77,000 to the U.S. government in '91. I bought that for $3,100. And then what I did, I transported it, imported it into Mexico, which raised it to about $10,000. And now I'm going to be able to sell water in the desert, basically just taking seawater. And I still haven't finished it. I'm putting a solar system on it. It's 30 kilowatts. It's a pretty sizable operation. It'll produce 600 gallons per hour, and you can operate it for about 10 hours because the sun has to be in the right position. So I can generate about 6,000 gallons of water a day. And so I figured, and I've got people actually asking now, 2 towns are asking to install the plant at their location, and I'm trying to see which is going to be the best deal for me. Mm-hmm. So there are opportunities in Mexico, I think, that are incredible. The peso is very low. Mm-hmm. The dollar is very high. I mean, King dollar is strong here. So and I'm playing a little bit the peso and the dollar by actually buying pesos now. I think the dollar has reached its high, or it has already reached its high, and I think it's kind of heading down. And I wish I knew how to chart the peso against the dollar, but I don't know how to do that. But I'm going by instinct. And I'm a long-term player. I don't buy something and turn it over in 3 weeks, or I kind of like to hold things for a year and then really get advantage if it goes down. So if the dollar goes down, maybe, not sure, but the way they're holding it up, it seems like it's never going to go down.
Hey, Charlie, I got a question for you from one of our listeners. What do you do about healthcare? You're like me, you're no spring chicken. What happens if you need to see the doctor or something?
It's a very simple solution, actually. I stay healthy. I have, by the way, you're talking to someone who had 2 heart attacks in the United States, living on a Western diet. If you YouTube McDougall, Dr. McDougall, okay, he has, and that changed my life. About 2 years ago, you're talking to someone who used to weigh 197. Today, I went on the scale, I weigh 174. I changed my diet. It's called an all-starch diet, fruits and vegetables, lots of fruits and vegetables. I don't eat meat. I gave up meat.
We'll talk to you soon. Thanks for calling in, Charlie.
You're welcome. Bye.
Good talking to you.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we'll wrap up the show here for today. Hopefully we'll have John Logan doing his show tomorrow, this week sometime, we'll hope. But we've got a very strong market. Not to be unexpected, we're up into the zones where, we mentioned earlier in the show between 1956 and 1980 in the S&P cash futures. Also, the Dow Jones has actually gone a little bit above the area. We thought it could get to the 786, which is 16,600. We're only 50 points away from there. But the key will be, where the market closes here, either today, tomorrow, or Wednesday. Because if this is it, we're going to have a pretty severe correction if this is correct. And remember, this is only a probability. This is all we're saying. This could be a probability in here, and that's really all it is. We're nothing more, nothing less to keep an eye on it. That's really, what we're looking at. So that's what we were talking about the euro before. I still believe the euro is headed down towards par at a 100. We need it to get below 110 to get it start to moving to the downside. The last rallies that we had last week were both spot on, 61% retracements. The one right after the report came in exactly at that 113.20 area, and then the one last night came in at 112.75, and sold off well over 80 pips since that. So that's following the trend to the downside. The $64 question is what will happen with this Bradley date that we have today, and then we have a Bill Ehrman date tomorrow, which is the 6th. So we have a window that goes from here till the 7th. It can't be off by more than a day. And then on Friday, of course, we have Mercury moving into direct motion. The last time it went into retrograde was on the 17th of September, and that's when we had, the Fed was in there with their craziness, and we had these big reversal type days. So we have a Mercury going direct, which means that communication and information should be a lot better and clearer to read. That's what the classical astrologers say, but that's a hard thing to trade off of. You've got to actually look at the numbers of what you want to see. So that's it, folks. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.